Insights on Monday, the 14th of September 2020. A very exciting webinar series hosted weekly on Mondays at midday by our panel of industry thought leaders. This is for business owners who simply want to be in the know about the latest news and most significant initiatives in the Australian business landscape that impact how they do business. Our panel of advisors aim to inform, educate, and provide strategic insights to the changes in the economic, legislative, and financial landscape that affects you as a small to medium business owner. We aim to guide our viewers to navigate business challenges throughout COVID-19 and beyond. In other words, we want to give you wise advice that you can make well-informed decisions in this period of the pandemic and beyond. Now, let's meet our panel of industry thought leaders. A very warm welcome to Adam Wear a Mask Lyle from O'Brien and Palmer Insolvency and Business Advisory Guru.
Hey guys, and yes, I do have the mask here. It's ready to go. A bit muffled if I wear it while I'm presenting, but thanks for having me.
Thanks, Adam. Big welcome to Bernard, the Chief Tuamal from MGA Insurance Brokers, our insurance expert.
Hey Rob, hey panelists, great to be here again this afternoon.
Welcome Ian, Numbers McLaughlin from Imperium Accounting and Tax, our tax guru.
Thanks Rob, welcome viewers, and hope you enjoyed today. Thank you.
And a huge welcome to Sam, the Money Gureshi from Money Clip Private Wealth, covering interest rates, banking and financial markets.
Thank you, Rob, and great to be here with everyone today.
Well, first off today, we're going to start off with you, Ian. What's happening there?
Thanks very much, Rob. So just a couple of things that I wanted to touch on today. The first one is that today is the 14th of September. So today's the last day where businesses can lodge their August JobKeeper declarations. So just a reminder of what they need to do. They need to go on and they need to submit their actual August turnover, and then they need to submit their estimated September turnover as well. Now, I just wanted to touch on something that's coming out of Victoria. So they've announced a package of $3 billion in cash grants, tax relief and cash flow support, which is going to be delivered to Victorian businesses that have been most affected by coronavirus restrictions. So these are announced by the Premier Daniel Andrews, and the package will provide, so basically there's going to be a third round of the Business Support Fund to provide up to $20,000 for businesses with a payroll of up to $10 million. Then there's going to be grants of up to $30,000 for licensed pubs, clubs, hotels, bars, restaurants and reception centres based on their venue and capacity and location. And then there's grants of up to $20,000 to help alpine businesses. So the other one is that payroll tax is going to be deferred. Now, this isn't a waiver, but it's a deferral. Okay, so there's going to be a planned increase in the landfill levy for 6 months and the bringing forward of the 50% stamp duty discount for commercial and industry property of all regional Victorian businesses. There are some, however, waivers with this, waiving 25% of the congestion levy this year with the outstanding balance deferred. So I just wanted to touch there on the third round of Business Support Fund and what that looks like. So the amounts of the grant for this range from $10,000 to $20,000 depending on the business's annual payroll. So to be eligible for the grant, the applicant must operate a business located within Victoria, participate in the Commonwealth's JobKeeper scheme, employ people and be registered with WorkSafe, have had an annual payroll, of less than $10 million in 2019/20 financial year, and be registered for GST and have an ABN. So what will the grants look like? So it's going to be a grant of $10,000 if the annual payroll of the business is less than $650,000. It's going to be a grant of $15,000 if the business's annual payroll is between $650,000 and $3 million. And where you get the maximum $20,000 grant is if the payroll is between $3 million and $10 million. So the applications for that haven't opened yet, and the Victorian government is going to announce more details on that when they come to light, and we will cover those off in the next episode of Business Insights when they're at our hands. So that's it from me today, Rob. So thanks very much.
Thanks a lot, Ian, and that's some welcome relief there to our poor cousins over there in Victoria. That's some good news and some welcome relief for them. I'm going to throw it over now to Bernard, the Chief Tuamau from MGA Insurance. What's going on in the business world there?
Thanks, Rob. I spoke a couple of weeks ago about the business interruption test cases. Now, this has actually gone straight to the New South Wales Court of Appeals. The courts have found that this is important enough to be expedited into the New South Wales Court of Appeals. Now, just to refresh everyone's memories, this relates to business interruption insurance policies that refer to the old business interruption clause of Quarantine Act of 1904, which again has been replaced by the Quarantine Act of 2015. Now, there will be a lot of people interested to see what the outcome of this is. So if you do have a business interruption policy that does refer to this old Quarantine Act, please check your policy wordings, speak to your advisor, and let's see what the outcome of this court case is. Now, in other news similar to this, now the Star Group, or the Star City Casino, Rob, I'm sure you've been there plenty of times, has also issued a court proceedings against Chubb Insurance under their ISR insurance policy. Now, Chubb originally declined their claim in relation to loss of income as a result of COVID-19. As a result, the Star Group are taking Chubb Insurance and a few other insurers to court under the same guidelines that we've heard previously under the business interruption insurance exclusion. So that's what's happening in those two cases. Now, spoke about it a couple of weeks ago in the same sort of article, which spoke about the increases in premium under professional indemnity insurance and directors and officers insurance. These premiums are increasing, hugely. We're seeing an increase of around 15 to 20% quarter and quarter. And this is as a result of not only COVID-19, but as a result of numerous financial loss claims around professional indemnity insurance and around directors and officers. Now, traditionally, directors and officers insurance and financial lines insurances was quite competitive in the Australian market. The reason being is there weren't many SMEs and there weren't too many companies that were taking out management liabilities or directors and officers insurances. So what insurers did was, to make SMEs and companies take out this insurance, the premiums were quite competitive. What's happened over the last previous years is that other insurers entering the market have kept pricing competitive, but as a result of a lot of claims, people lodging claims against their insurance policies, this has actually increased insurance premiums. Also, in the last obviously year, COVID-19 has seen the collapse of many SMEs and many corporations. And that's what's driven the increase in premiums. So what do you do here? So although there are an increase in premiums, it's important for you to work with your current insurance advisor. If you feel as though you're not getting the advice from your current insurance advisor, seek advice elsewhere. It's important for you to work with them to ensure that your business is reflected and is covered properly underneath your directors and officers insurance or your professional indemnity insurance. If you have any concerns about the increases, they should be able to explain to you the reasons why it's increased. They should be able to provide you some alternate quotes as well, if you feel as though you're not getting value for money. It's important right now to work with your advisor to make sure you're getting this clear advice. Rob, that's all for me this week.
Thanks very much, Bernard. Now going to hand the time over to Adam Lyle from O'Brien and Palmer to cover business advisory.
Sorry, I just had a mute issue there. Thanks, Rob. I guess where I wanted to sort of focus my attention is we are now officially in the middle of a recession. Now, what does it actually mean for an SME? What can an SME business owner or a stakeholder do? And remember that our audience, not everyone that's watching us today is a business owner. They might be a lender or they might be a shareholder or a business advisor. It could be a lawyer or some other type of advisor to business. Well, the reality is that 37% of all businesses fail for two main reasons. Number one, inadequate cash flow or high cash use. It makes up 20% of all failures. 17% is poor strategic management. Now, what does poor strategic management mean? It basically means that business owners and stakeholders aren't following or installing some kind of process when making decisions about the strategic direction or the situation that a company is facing. So I've got 4 tips today that I want to encourage everyone to get their pen and paper out and write down, because I believe truly that if you follow these 4 tips, you won't fall into that statistic of a failure, or you'll certainly heighten your chance of not becoming a statistic. But I think generally speaking, your business will be better off for it anyway. So here they are, top 4. Number 1, remain calm. Take a breath. Actually, don't rush your decisions. Make sure that you are absorbing all the information and taking that extra breath. Practicing calmness and exerting the presence of calmness when in crisis is extremely valuable. All right. Rob Skeen talks about it every week. And when negotiating with, with agents, calmness gives you power. Number 2, knowledge. Every week, Ian McLaughlin talks about knowing your numbers, making sure that you're on top of your numbers. Now more than ever, knowing your numbers is imperative in your strategic direction of your business. Information and data is paramount when making big decisions. Gather every ounce of these 3 things as much as you can, as often as you can. Number 3, advice. Get an external or professional view. We've got 5 fantastic professionals on this webinar every week, plus Lisa Garrido normally every Monday. Listen to what they've got to say. Don't be afraid to pay for good advice. If you pay for it, it will be worth it. It will add value to your business and to your decision-making process. Number 4, trust. Trust the combination of all of these things that I've spoken about today. And when you have that sweet spot of all these 3 things, then trust the decision you make and be resolute with that decision. Don't be wishy-washy or I'm not sure, or I'll just do it for a week or so and we'll see how we go. No. Be resolute. Make the decision, make it a good one and do it well. Go forward with it. I hope that the next 6 months, because we're not out of this by any stretch of the imagination, I hope every viewer here doesn't become a statistic. And that's hard to say when ultimately part of my practice is dealing with businesses that do need to fall into some kind of external administration. But I've been on this mantra for 25 years. My peers don't like it, but I love it. I love helping businesses not fall over. It actually is, it gives me great pleasure in seeing a business survive. So I hope those 4 tips have been great. Make sure your decisions are really solid. That's it.
Thanks
from
very
me.
much, Ads. That was great. I mean, some wonderful tips there. So viewers, please make sure you share this video, like it, follow us for more. I think people need to hear those sorts of tips and advice in their business world, especially at the moment. Now I'm going to hand the time over to Sam Qureshi from Money Clip Private Wealth. What's going on with investment, super and interest rates at the moment, Sammy?
Thank you, Rob, and great tips from Adam for sure. So thank you for that. Look, in terms of interest rates, they're holding steady at the moment with little movement, so not much change there since previous weeks. However, banks are proactively contacting customers to discuss their home loan deferrals. In fact, I read recently in AFR that 70% of these deferrals are due to owner-occupier home loans, which is quite a high number of percentage of owner-occupier. There's been relatively small take-up of the government guarantee SME loans. These are the loans that were for 3 years, extended up to 5 years, and 50% guarantee. There's a Senate inquiry at the moment where the banks are being asked about how they're coping with COVID and what they're doing. And one of the questions was, why is there a smaller uptake of these SME loans? But the number of overdrafts are increasing, which is obviously a higher interest rate. And so far, it looks like the banks are stepping or tiptoeing around this question a little bit. But it'll be interesting to see how there's more information that's going to come out of that is going to be relevant for everyone. Now, the other thing I noticed was that CBA last week came out with something that was quite different, and they've intimated that they're going to be engaging in all those people who are on deferrals, likely to be out of work or not get back to work early enough, with conversations about maybe they should start selling sooner than later and downsizing and have smaller loans. So that tells you that, potentially the banks are a little bit nervous about what is likely to still occur into the next quarter and the first quarter of next year. And whilst the predicted 10% decline in the property market hasn't occurred, especially in the New South Wales market, it does point to the view that the banks feel that there will be some declines in value to come. And I'm sure that Rob will give us some more update about that as we go along in his property update. Now, in terms of the markets, they continue their multi-weeks of decline now. The market has been consistently going down and finished another 0.8% lower for the week. And the biggest losers were very much the tech stocks. They're down about 3%. They're really going through a major price adjustments at the moment and some profit taking. Extra moves are also around the energy sector with the oil. There was some movements there, and the energy sector dropped almost 5% last week. And gold is if anything, is holding steady at the moment. So a couple of things that's quite interesting topics to keep in mind is there's going to be some focus on how many companies are using JobKeeper to keep the dividends up and pay bonuses and increases to the management. So there'll be some fallout from that's going to come out, and that there's some articles coming through the media at the moment about that. I was also reading over the weekend some articles that confirmed that retail online trading has been accounting for a lot of this recent period of strength that we've had in the market, and pointing to the fact that the professional investors very much are sitting on the side and being very selective as to what they do. And again, this is a word of caution to everyone to be very mindful of the randomness of the market versus doing some trades, making some money, and feel that you are now a professional investor. I really warn everyone to tread very carefully at the moment, because there are many variables that could have a profound negative impact on the market. And of course, if there's anything else that will come up, I'll certainly share it over time. With that, I'm looking forward to hear your property update. Sure.
Thanks very much, Sammy. Yes, so numbers from last Saturday, the 12th of September 2020, Sydney was up in terms of listings. There were over 100 new properties that have come on the market from the week before, taking the listing numbers up to 541 homes going to the gavel, with a final clearance rate of 65%. Total sales volume for the week, just over 234 million. Now, a lot of that taken up by this next sale that I'm about to talk about, which was the second highest sale price in Australia's history, happened last week. Katie's co-founders of women's clothing change, obviously, Katie's, sold off-market their Point Piper trophy home Edgewater for an eye-watering $95 million. Who would have thought a sale of this magnitude in a pandemic and a corona session? It goes to show, as I always say, people need a home, and as life goes on, well, life does go on, regardless of what's happening in the world. And I love this type of mindset, not being paralyzed by fear and procrastination, but having a mindset of abundance in these times. Absolutely love it. Now, a couple of doors down is Australia's most expensive house, Point Piper Estate Fairwater, which sold to techie Mike Cannon-Brooks in 2018 for a whopping $100 million. Now, he was, of course, the recent purchaser of Jennifer Hawkins' record-breaking home in Newport that I spoke about a couple of weeks ago for $24 million. This guy, he's setting highest price records all over the place. He really needs a buyer's agent. So guys, if you know him, viewers, if you know him, please refer him to me. I'll help him save some money. That's all from me this week. I'm now going to hand it over to the panel. Do we have any questions, guys, for each other?
I just
I
was baffled by what would be the commission for that?
Very hot.
Look, hate to think 2% of 100 million. What's that, Sammy? You're the numbers guy.
2 million.
Woo.
Well, it's an automatic. They must go and see Sam to work out how they're going to keep that money for as long as they can.
Indeed, indeed. A question for
Um,
you, Ian. With the change with the grant in Victoria,
Yeah.
and those amounts that you mentioned seem very disproportionate. 10,000 pop to 650, but 20,000 for someone who's got 3 million to 10 million. The extra 10,000 doesn't really make that much difference to a company like that.
Yeah.
Is there any plans ever for those things to be proportionate in some way?
Not at the moment, but look, based on what's come out of Victoria in the past, they don't really. I don't really want to say they don't really know what's going on, but I just don't. I'm just not sure about those numbers myself, Sam, as well. So that's all just been proposed, and the full details haven't been released yet. But let's just wait and see. But I agree, they are very disproportionate for only an extra $5,000 or $10,000 between the 10,000 and the 20. So yeah, they are quite strange. So, but let's just wait and see what comes out of it.
Yeah.
But these small little snippets of money, you know how you get the really good Band-Aids and you get the little flimsy plastic ones? They resemble the little flimsy Band-Aids. They're not really going to do much. You remember that Victoria is Australia's second largest economy. So this is going to have a bigger impact, not just on Victoria, but the wider economy. And the GDP deficit is going to be huge.
Yeah.
My notion to the panel, just on a lighter note, is I'm really looking forward to seeing the look on the All Blacks' faces when they lose the Bledisloe Cup, because it's all going to be held here in Australia between November 7 and December 12. For 6 weeks, this country is going to be the home of rugby in the Southern Hemisphere. It's going to be so cool.
Nothing wrong with that.
I hope we're allowed to go watch the game.
Ian's father-in-law must be so excited.
Yeah, I think he's very excited for that. But hopefully we can still beat the All Blacks on home soil. It's pretty tough to do that on home soil. So let's hope.
Yeah, absolutely.
Anything to level the playing field, right? So
I must say, you look pretty good, Ian, for a newly father.
Thanks very much. I'm actually we're actually down in Canberra at the moment, so it's nice to get away, and mum and dad are helping out with the baby, and I'm upstairs working.
Guys, we just hit 12:30, so we're right on time. I want to thank you very much once again for tuning in and giving us your advice. Thank you very much to all the viewers who are listening. As I said before, please like, comment, share the videos. We put this out there for you guys every week. It takes a considerable amount of time to collate this information and give it to you, because we want you to take this advice and be successful and make wise decisions, as I said in the beginning of this segment. So folks, once again, thank you very much. Thanks a lot, panelists, for being here today, and we'll catch you all again next Monday at Business Insights at midday.
Thanks, Rob.
Thanks, Rob.